In today's episode, I'm going to walk you through everything you need to know about how to trade the US stock market, even if you are not a US resident. This is a question that I see posted in the comments all the time. A trader will say, Ross, I just watched your recap. I saw the stock make a huge move. I would love to trade these stocks, but I'm located in blank. Could be Canada, Mexico, Asia, Japan, Australia, any European country, South America, Africa, it doesn't matter. Anywhere in the world that's not the United States. And usually traders will kind of have one or two approaches. One is, how do I figure out how to actually trade the US market even though I'm located somewhere else? And I'm going to walk you through how that works in this episode. The second question that sometimes people will ask is, they'll say, Ross, I'm located in Germany, or I'm located in Japan or Australia or wherever it is. Can I apply the strategies that you teach to my local market? And the answer is yes, because the strategies that I teach and that I trade are generally agnostic. Once you learn the language of the financial market, you can apply it really to any financial market anywhere around the world. But there are some limitations that you have to be aware of. One of the reasons that traders from all around the world have been coming to the US market for decades and decades is because the US market has a tremendous amount of volume, a decent amount of volatility, and therefore a lot of opportunity. The US market is very liquid. It's easy to get in, it's easy to get out. In fact, with a click of a button, you can buy and you can sell. There's so many people trading that you can pretty much always find a match for your order. So let's say you're located in a different country and your country has a stock exchange, but it's not a very active stock exchange. Well, if it's not very active, there's not gonna be a lot of volume. There's not gonna be a lot of liquidity. It's gonna be hard to get in and out. But in order to get in and out, you'll need a variety of tools. You'll need charts, you'll need stock scanners, you'll need a news feed, you'll need a broker, and you'll need all of those services that cater to the market that you're in, which means they subscribe to that market data. Now, that's not going to be simply even an option in a lot of markets because the market's not strong enough to support all those sort of ancillary businesses. The US market is such a big market that there's a tremendous amount of businesses and tools that have been created to support traders in this market. And of course, the software that I've created is just one example of that. So in order to trade the US market, you need the same things. You need charts, you need scanners, you need a news feed, and all of that is readily available at a relatively low cost. So now the question really is, all right, you're a non-US resident and you want to figure out how can you trade the US market like all these other international traders have been doing for years and years and years. Let's jump onto the slide deck and I'll walk you through it. Okay, so we've got a couple topics that we're going to go over, and we're going to start with choosing a broker that gives access to US stocks. This is probably the most important thing. If you don't have access to US stocks, naturally, you won't be able to trade them. So if you open an account, let's say you're in Canada, and you open an account with, I don't know, Royal Bank or Scotiabank or something like that, you may be able to buy stocks of Canadian listed companies from just your checking account, from your savings account. However, you most likely will not be able to trade US companies. And even if you could buy them, you're not going to be able to trade them. What you need is a broker. The broker is the intermediary that sits between you and the stock market, the actual exchange. So let me kind of show you how this works. Now, it's a little different in some countries because, as I said, in some countries, you can just open a regular bank account, and in that bank account, the bank can buy stocks right on the exchange. So they can buy stocks off the exchange, which is the stock market, and whatever it is the local stock market for that country. But in the United States, a typical bank is different from what's called a broker. A broker-dealer is an institution that has a license to buy and sell stock. And so what you do is you open an account with this broker-dealer, and when you click the buy button on their web platform, or you click the sell button, that order goes straight to the exchange, comes right back, and you can trade without having to pick up the phone. You don't have to go into a branch. They have platforms that are designed for active trading. I don't think I'm saying anything that you don't know, but just for the sake of making sure we're all on the same page. So the first order of business for you is to find a broker that will allow you to open an account. But maybe you're saying, well, geez, Ross, I live in Ireland. Do I have to open a US bank account? I don't have a US address. Wouldn't you need a US address to open a US bank account? Do I need to open a US account in order to trade the US market? And the answer is no, you can, but you don't have to. So let me first talk about some of the reasons why you might not want to open an account in the United States. All US residents face what is called the pattern day trader rule. The PDT rule was enacted on February 27, 2001, and it requires a minimum of $25,000 in order to day trade. All US broker dealers enforce this rule, every single one. And it doesn't matter which one you think of, every US broker dealer enforces this rule. It's a FINRA rule, it's a regulation. They have to enforce it. Now, they enforce it not just on US residents, they also enforce it on any international customers that come and open an account here. So there are a lot of US brokers that are happy to have you come open an account here, and I'll share several with them with you in this episode. But just know that you would need to maintain a minimum balance of $25,000 in order to day trade in a US account and have 4 times leverage. So if you want 4 times leverage, if you want to be able to day trade, and you've got 25,000, then it would be totally fine to open an account here in the US. But for everyone else, there are some other options that we should discuss. So non-US residents have no PDT rule. Again, and this is going to be based on, you don't have a PDT rule, but you could choose to subject yourself to the PDT rule if you open an account with a US broker. So what most non-US residents are going to do is they're going to open an account with a non-US broker or with a non-US branch of a US broker dealer, which would also be fine. So depending on your residency, you may be able to open an account with a US broker, but you should know that all US brokers will enforce this PDT rule on you. And the US also has an agreement that US brokers will not accept accounts from Canadian residents. I don't know why that is, but it's a rule that's been around for quite some time. So if you're a Canadian resident, you will be out of luck if you try to open an account with any US broker. So you wouldn't be able to. But a lot of other foreign residents would be able to find a US broker to trade with if that was desired. The broker that I use for my trading, and by the way, I'm going to say right now, I don't have any affiliate relationships with any of these brokers. So whatever broker you decide to use, I'm just sharing with you some of the tools I use. So I use Lightspeed as my broker, and they do accept international customers. So Lightspeed is a broker dealer, and they have a $25,000 PDT rule minimum, right? So that's in order to day trade. But you get 4 times leverage. You do have access of shares to borrow if you want to short. Their platform is pretty solid, and the commissions are generally for a brand new account. I think it's $2.95 per ticket. So that's Lightspeed, just as one example. Now, a couple other US brokers are Cobra, Guardian, and Centerpoint. Now, Centerpoint also has a Canadian branch, so they will accept Canadians now. But these ones, as far as I'm aware, do not. Okay, so let's talk about the first international broker that most most non-US traders would want to consider, and that is Webull. So Webull is a relatively new broker dealer. They're expanding operations, so they're working to compete with some of the more established brokers. And the best way a new broker comes on the scene and competes is by offering discounted commissions, discounted pricing. So they have a minimum of $2,000 in order to get leverage, but Webull accepts accounts from the following countries: the United States, the United Kingdom, Hong Kong, Singapore, Australia, South Africa, Japan, Mexico, Canada, Indonesia, and Thailand. So those are the residents of any of those countries currently would be able to open an account with Webull. I would say that the Webull platform is simple, is easy to use, and is better than Thinkorswim for active traders because they allow offsets. Their commissions are relatively low, $2.99 per trade for the Canadian branch, but commissions are calculated as a fractional percentage of total trade value for other branches at 0.00025 of trade value. So the way that works, so if you did a $100,000 position, which would be, let's say, 10,000 shares of a $10 stock, your commission on that trade would be times 0.00025. You would pay $25. So it'd be a $25 commission on that trade, which, I mean, that's not nothing. But when you look at the second option that many traders would consider, it's actually a little bit less expensive. So international broker number 1 is Webull, but it doesn't work for everyone. International broker number 2 is Interactive Brokers. Their commissions are 0.005 per share, which means if you did 10,000 shares, you would actually pay a $50 commission. For 1,000 shares, you'd only pay a $5 commission. Now, some of you guys might immediately be like, well, wait a second. What about commission-free trading? Commission-free trading is for U.S. residents because in the United States, U.S. broker-dealers are allowed to engage in the payment for order flow relationship with wholesalers or institutional firms. That a payment for order flow is not allowed in a lot of other countries. It's simply not allowed. So instead of the broker getting paid through your order flow as a kickback from the wholesaler, that doesn't happen. They get paid just simply by you paying a commission. And in fact, I would argue that that's better because I personally still trade with Lightspeed, even though I pay a commission on every single ticket. I choose to pay that commission because I think it's faster to execute my order directly to the market. Because just back in this example here, the way a payment for order flow broker works is that your order gets routed first to the wholesaler. So this is the institutional trader, the institutional trading firm, and they try to fill your order. If they can't fill your order, then they send your order out to the exchange, and this adds latency. So your order is going to be a little bit slower to execute because it goes through this pool first before it goes out to the exchanges. So I would rather just go direct to the exchanges. Now, yes, it's true that sometimes you would get a fill here, and maybe it would even be a slightly better price than if you went to the exchange. They do advertise that you get price improvement. But in my experience, having used commission-free brokers, I find that this method of direct routing is faster. So you do get direct routing at Lightspeed, Cobra, Guardian, and Centerpoint. And when you're using an international broker, an international branch of Interactive Brokers, for instance, they're not able to do payment for order flow because it's not allowed in a lot of countries. So anyways, Interactive Brokers is the largest broker-dealer in the world. They offer desktop platform, mobile apps, but you can also integrate with third-party software that a lot of professional traders use, such as Dash Trader. They require a $2,000 minimum to get leverage, but they do offer 4 times leverage, although not in all countries. They don't enforce the PDT rule on non-US residents, and they support traders from United States, Canada, Australia, and over 100 other countries around the world. So if I just back this up for 1 second, I actually pulled up their page here. Oh, this is their commission page. So this shows their commission, and it does vary. I guess it varies depending on how many shares you trade, but if it's fixed, it's at 0.005. Now, this was the list of their available countries. So look at this list. I mean, this is kind of incredible. So you've got Australia there, you've got Antigua, Barbuda, Anguilla, you've got Albania. I mean, I'm obviously not going to read them all, but you could go to this page and you could see all of the different countries supported. So not every single country in the world. There's certainly some OFAC countries that they're not allowed to service, but this really is the largest broker in the world in terms of the different people that they support. The only downside with them that I would say is that their commissions are a little high. They're not as low as I might prefer, especially for me being a really active trader. 0.005 is fairly, it's fairly expensive. It's going to add up $50 for 10,000 shares. So, I'm not saying I couldn't trade there and make money, because I certainly could, and I have before, in fact, but it's just going to be a little more expensive. And something that's worth noting is that as a beginner trader, when you're getting started, you want to kind of make it easier for yourself to be successful. And there's a portion of that is going to be thinking about fees. So now I'm going to share with you the third broker. And I've only got 3 that I'm sharing with you. It's not that there's only 3, but these are just the 3 I'm sharing that I think are decent. TradeZero does offer free commissions. Now, this one's kind of interesting. They don't accept U.S. residents for their international branch, but they have no PDT rule, and they actually offer 6 times leverage. And they have excellent availability of shares to borrow, better than Interactive Brokers and better than Webull. They have a $500 minimum account size. Their platform is custom, and it's not as popular as the platform offered by Webull or Interactive Brokers. That's a fact. Their commissions, however, can be free for non-marketable orders, or it's 0.005 per share for marketable orders. So their commissions are either the same as Interactive Brokers or free. So the way it works when it's free, and I'll show you, I'll pull up my trading platform here. Let me pull this up. So I've got 2 accounts here. I'm going to switch to my main account. So this is my main account, and I'm going to pull up a stock here, BNZI, and I'm going to pull up my order entry window right here. So if I place an order to buy this stock, let's say I place an order at 190 to buy 25 shares. I'll just do an example. I'm going to place the order, and my order is going to sit there. Do you see how my order is sitting there right now? The fact that it's sitting there means it's a non-marketable order. A marketable order is an order that fills instantly. Instantly it fills. A non-marketable order sits and you have to wait for it to get filled. So if we look at the website of TradeZero, they say orders are free, and they give you an example. The buy share of Apple must be less than $125.10 with the current spread of 125 by 125.10. So what they're saying essentially is if you execute a non-marketable order, there's no commission, it's free. So why is that? And exactly how does that work? So if I put my order here at 190 and I just place it there and I sit there, that order would be free. Now, the price moved up, so of course I wouldn't have gotten filled. I would just have to wait. Let's look at something that's more actively traded, and I'll just do 1 share. So we'll do 1 share of Tesla right here. And I'll put my order down at 81. So now my order is going to sit there, and I have to wait for the price to drop. Now, if the price doesn't drop, I won't get filled. But let's put my order at 97. My order's at 97, and now I filled 1 share. So I'm in 1 share of Tesla. Now, if I want to sell it right away and I sell on the bid, I am taking liquidity, and that's a marketable order. So I would have to pay for that. If I put my order up on the ask, even though currently I'm at a loss, if I put the order at the ask, which is 87, now I've got to click the ask. I'm going to use my hotkey to do this. So the order's at 91 right now. So now I've got to wait for the price to come up to 91. When the price comes up to 91 and I get filled right there, I'm out, and that trade would have been completely commission free. It's commission free because none of my orders were marketable. Now, in contrast, watch this. This is a marketable order. Boom, in instantly. That's a marketable order to buy. That's a marketable order to sell. In and out instantly. So those 2 orders, those last 2, would have cost me a commission. The reason that they're able to give you this discount when you add liquidity is that they get to collect a rebate when you add liquidity to the market. Adding liquidity means you're putting an order out there, and if it's a buy order, the order is sitting on the book, and you're going to wait for someone to come and sell you shares. So you helped create liquidity in the market by putting an order that sat there until someone wanted to sell. Because that person who wanted to sell, you were the match. So by putting your order out there, you're doing what the market wants you to do, which is add liquidity. And you can earn a rebate for that. Now, you don't get paid the rebate at TradeZero. Typically, when I do that at Lightspeed, I actually get paid a rebate. It's a small rebate. It's a fraction of a penny. It's about 1/3 of a penny for every share that I sell that way or buy that way. But it's a small rebate, and it does add up. Today, I think I added about $100,000 in shares in liquidity. So it'll be about $300 that I'll get paid today. I'll get a $300 rebate on those shares. So you won't get a rebate at TradeZero, but you'll get free commissions. Now, I suppose if you think about it like that, maybe you'd be better off in some ways using a broker like Lightspeed, because then you collect the rebate when you add liquidity, and then that offsets the fee when you take liquidity. Because when I take liquidity at Lightspeed, I do pay a fee. So at TradeZero, it's kind of like that, except it's instead of getting paid, you get a free commission. So the broker gets to kind of keep the rebate for themselves. And then when you take liquidity, you pay 0.005, which is the same as what you're paying over at Interactive Brokers. So at the end of the day, if you're comparing Interactive Brokers to TradeZero, TradeZero has the potential to be cheaper because they do have, they'll give you free commissions. I'm actually not sure if international branches of Interactive Brokers will offer you rebates on your trades when you're adding liquidity. They don't list it here. We can just click this arrow and see. So I'm not sure if they do. If anyone knows if they do on the international, specifically international branches, you could let us know. But that could be interesting to know if they do give you that rebate. But nonetheless, if you're an international trader, I would say these are your sort of three main options. Webull, if you're in one of the countries they support. Interactive Brokers, and you're definitely going to be in one of the countries they support unless you're in, I don't know. There's only probably like 5 countries they don't support, if I'm going to be honest. They support almost everywhere. So Interactive Brokers will work for most people, but it's a little more expensive. But they've been around for a long time. Good customer service, no issue there. Or TradeZero. It's a smaller firm. It's less expensive, potentially, when you're doing these types of orders. And if for those of you guys that are familiar with the way that I trade, typically when I'm buying, I am taking liquidity. So I pay the fee when I buy because I buy at the ask. The reason I do that is because when a stock is squeezing up on breaking news, I want to get in right away. I don't want to sit and wait for someone to come sell me shares. I'm going to buy from someone who is selling because I feel like I have an edge. The stock is going up because it has news. I'm going to buy right away. So with TradeZero, for instance, I would pay 0.005 on my buy orders, and that's just the fee I would pay. So if I bought 10,000 shares, I'd pay $50 to buy it. But when I turn around to sell it, I'm going to sell it at the offer. I'm going to try to get the best price possible, and I'm going to wait for someone to buy my shares. And so that order would be free. Now, at Interactive Brokers, my guess is that you would pay the same fee both buying and selling, which is why TradeZero is going to be a little bit cheaper. And at Webull, you're just paying $3 for each trade. So Webull really is the cheapest. Especially if you're trading large quantity, like you're buying 100,000 shares of penny stocks, Webull is definitely going to be cheaper than Interactive Brokers. Or, well, I guess it could be more expensive than TradeZero. But again, TradeZero really is hinged on you never using a marketable order. And it's not realistic that you would never do that because that's just not how trading works. I would say at most, maybe half your orders could be non-marketable for most people. And it could be less than that. It might only be a third or a quarter. So it's something to consider. Okay, so now you've got a list of 3 potential brokers that you could consider. And again, as I said, no affiliate relationship with any of these. Choose what you'd like. It's going to be really whatever is best for you. You can set up SIM accounts with these brokers. You can do demos. You can try them out. You can see whether or not you like them. But these are 3 options that are great for international traders. Okay, now let's talk about the best time to trade. All right, we're going to jump back on the whiteboard here. And this is probably the biggest challenge, and the reason why someone who's in Australia or perhaps even in Europe will say, Ross, I want to trade your strategy, but I want to apply it to the local market. And unfortunately, what I would say is that my honest opinion is that while learning the language of the financial market is agnostic to which exchange you trade on, if you're looking for liquidity and volatility, it probably makes sense to trade the US market. And if that means your time zones and time of day that you're trading is going to be a little bit screwed up, then that's kind of what it is. So I like to travel a lot. And when I travel, I trade. So I just adjust to wake up so I can still trade the US market. So here's the time zone for the market. Now, you may be aware that the market, some brokers are offering 24-hour markets. However, even in spite of that, there are windows where we see peak volatility. And I'll show you some. So we got from 4 a.m. to 7 a.m. and this is all Eastern Standard, from 7 to 9:30 a.m. and then from 9:30 a.m. to 4 p.m. and from 4 p.m. to 8 p.m. So currently, if I was going to give you a volume ranking. Where we see the peak volume is starting at 7 a.m., volume increases, and it goes up. And then right at 9:30, we have a big spike in volume, high volume, and then it kind of goes lower and lower and lower to the close. And then if there's stocks with breaking news, they can spike up after hours, but the volume usually dies off pretty quickly. And pre-market, you can have some news right at 4 a.m., but it's usually pretty light volume until about 7 a.m. So if you are trying to focus on the time of day where you have peak volatility, you're going to want to be in this range here, which is from about 7 a.m. until 11 a.m. Now, you could go a little later, and there's nothing wrong with trading from 2 p.m. to 5 p.m. because you do still have volume and volatility in this range. So, 2 p.m. to 5 p.m., that would be an evening trading session if you're in Europe. Look, that could work if that works for your schedule. Or, 7 a.m. is, 1 in the morning, 1 in the afternoon if you're in Italy. So, you're sitting down at 1 p.m. and you trade until, 3 p.m., 4 p.m., and then you're done for the day. So that might work with your schedule, it might not. If you're in California, well, geez, 7 a.m., you're sitting down at 4 in the morning. So you're sitting down, it is pretty early, I'm not gonna lie, but you could get up early, you could trade until 7 a.m. Eastern Standard Time, or you could trade till about 9 a.m. Eastern Standard Time, 10 a.m., and then you're getting ready to go to your regular job. So we have traders that trade the US market from all around the world. The 4 a.m. to 7 a.m. window is pretty light volume, and currently the extended hours from 8 p.m. until 4 a.m., so the nighttime session, is on very light volume and is only available on a select number of S&P 500 stocks and ETFs. So it's not, and there's limitations that if stocks go up or down more than 20%, they're halted until the next session. So it's not a very liquid time to trade. So if you're really looking for the best time to trade, I would say, in my opinion, it's going to be starting as early as 4 a.m. and it's going to be lighter, and volume's going to be picking up until it peaks right around 9:30 to 10, and then it starts to taper off. So at the end of the day, you could probably consistently find opportunities anywhere from the 4 a.m. to 8 p.m. window, except for like the last 2 hours of the day. 6 p.m. to 8 p.m. is going to be the most inconsistent. Because look, if you make a mistake, you don't have time to recoup it. So a lot of people are not trading during that hour. So I would generally say that, anywhere from 4 a.m. until kind of a hard stop at like 6 p.m. Is viable. And again, the more time you fit in doesn't necessarily mean more profitability. I'm choosing this window right here. I could wake up earlier, but I don't feel like I'm missing enough to warrant it. But if this was all I could do because of my time zone, then I would make the most of that time. And I would focus on hitting my base hits during this window, getting good at it. And if I could prove through proof of concept that I knew what I was doing here, then I would work my schedule around so I could squeeze in more time in the day. One of the things that most traders do is, once you start to develop a strategy, you've been practicing in the simulator, you want to start to scale up and you want to test yourself and expand what you're doing. And I've done all of that, and now I've brought it back into the area where I perform the best and where I have the highest ROI. So for those of you guys who are international traders, I hope you found this interesting. I hope you keep tuning into episodes about trading strategy just like this. I'll remind you as always, look, trading is risky. My results aren't typical. So please take it slow and always practice in a simulator before you put real money on the line. If you choose to open an account with one of these brokers, or you have anything you want to share to this episode in the comments that might be helpful for other international traders, maybe you have another broker you really like, feel free to throw that down there in the comments. And I want to thank you again for watching this episode. All right, I'll see you for the next one real soon.